Hello everyone, it's Dale here. Welcome to the webinar. I'm very excited to get started, so let's get to it. The topic of today's webinar is how to trade with a volume profile, and this is what we are going to learn today. The first thing that we will cover will be volume profile basics. So if this is the first time you hear about the volume profile, then we'll get you acquainted in here. Now the next part will be the biggest part and the most important part of this webinar, and it will be the trade entry setups. In here, I'll talk about my most favorite volume profile setups. I'll give you exact steps how to trade them, so when you finish with the webinar, you will have complete set of rules and you'll be all good to try it out on your own. Now the next part will be how to use volume profile to set your take profit and stop loss. And then I'll discuss the importance of time frame when trading with volume profile. I will also show you my volume profile workspaces, which I use for my day trading as well as for swing trading and planning my long-term investments. And in the next part, we'll cover the ideal trading instruments to trade with the volume profile. And next, we are going to discuss trading platform, data, broker, and in the end, I'll point you to some further volume profile education. Now let me give you at least some very brief info about me. My name is Dale, and as far as my formal education goes, I have a university degree in finance. I have some of the fancy trading certificates, but that really shouldn't be the reason why you should listen to me. Because if you choose to listen to me today, it should be because I have over 12 years of real trading experience. I've been trading stocks, investment certificates, automated systems, and currently I focus mainly on trading manually. Now, a couple of years back, I founded a website, trader-dale.com. I've also developed some indicators. I developed the volume profile indicator, VWAP indicator, and order flow indicators for NinjaTrader 8 platform and also for MetaTrader platform. And I also wrote two books, Volume Profile, The Insider's Guide to Trading, and Order Flow, Trading Setups. Both books are one of the best-selling trading books that you can buy on Amazon. Now, the very first advice I'm going to give you in today's webinar is say no to standard indicators. The reason I say that is that big market participants who move and manipulate the markets, they don't really care if you use moving average with period of 20 or 70, or that one moving average crossed the other, or that RCI is showing overbought or oversold. They don't really care about that. That's just nonsense. The sooner you get rid of all these standard indicators which don't really help in any way, the better for you, because those indicators won't help you in any way. Now, to prove my point, let me show you this. Now, this table right there, this shows top 10 currency traders. Those are 10 biggest banks which control majority of the volumes. Those 10 banks control over 2/3 of all volumes that are traded on the currency markets. Right? So those guys are the guys who move the prices and who manipulate the prices. Those are the guys who set the rules for this game. Right? They move and manipulate the prices. Now, those guys have a huge amounts of capital to trade with. But the disadvantage to that is that when they trade, they need to allocate massive volumes because they have massive amounts of money to trade with, right? And those insane volumes reveal their activity. And this helps us to track those guys, to track their activity. And this is why I always say that volumes are the most valuable information you can get from the market. Because through volumes you can follow the big guys, those big guys whose game we play. So that's why I say volumes are the key, and that's why I like to use the volume profile and volume-based indicators to track actions of those institutions. Now, if this is the first time you hear about the volume profile, then this is how it looks like. The volume profile is a histogram which shows volume at price. Now that means that the wider the volume profile is, the heavier volumes were traded at that price level. So in this case, this volume profile shows three important volume areas: this one, and this one. So looking at this, we can tell that the huge trading institutions were active and were trading around this price level, around this price level, and around this price level. And this is very valuable information which you can work with and which you can build your strategy around, right? Volume profile helps identify positions of institutions, like I just showed you, right? So why is volume profile better than standard indicators? It's better because standard indicators only work with two variables, with price and with time. So all those hundreds of indicators which you have in your MetaTrader 4 platform, those are just variations, different variations of some formula which only works and calculates based on price and time. That doesn't tell us anything about volumes, right? This doesn't tell us anything about the big guys who move and manipulate the prices. Those indicators, those standard indicators, are delayed, and they basically show us where the price was at some point of time. Now, where is the edge in that? There's no edge in that. On the other hand, take the volume profile. The volume profile has three variables. It calculates with price, time, and volumes. And through the volumes, we are able to track the big guys, right? So that's why volume profile is better than all these standard indicators. That's the difference. Now, to make things a bit clearer, let me show you a distinction between volume at price, which is volume profile, and volume at time, which is standard volume indicator, which you can find, for example, in MetaTrader platform. So volume at time basically shows you how big volumes were at a certain point of time. Now, this is not too helpful because it doesn't point to any trading levels. It doesn't tell you like there is a support, there is a resistance, you should trade from this level or you should trade from another level. So this doesn't really give you that much information. But if you compare it to volume at price, which is volume profile, then there is a huge difference, because when you look at volume profile, you immediately know where the important trading areas are. In this case, it is this price area. Why? Because of the massive volumes which are traded by the institutions there, right? That's information you can work with, that's information you can trade with. So that's the difference between volume at price, very useful information, and standard volume at time, which is not really that useful in my opinion, at least not by itself. Now, what we have before us is the core of the webinar, which is the trading setups. But before that, let me address one pretty important thing, which I think you could be skeptical about. In fact, I think you should be skeptical about this, because every smart investor and trader should be skeptical. Now, the thing is, why would I reveal to you my working trading strategies? Why don't I keep it secret? Why don't I keep it for myself? Now, let me ask you, do you know how many people like you and me, I mean retail traders, trade in the market? I mean like percentage-wise. How many volumes we retail traders control? This is an information which you can find on the internet. You can verify it. It is an information from statistics from Bank for International Settlements. The number is 3.5%. Retail traders control 3.5% of all the volumes traded. So I don't really think if I share my trading strategy with a couple of hundred guys, anything will change. My trading strategy won't stop to work. The market won't start to move differently. So why wouldn't I share? I don't lose anything, right? Now, another important thing which I would like to address is that this is not a magic pill or a get-rich-quick guide. What I'm going to show you is not a holy grail. I don't make any promises that it will work for you and that it will change your life and you'll suddenly become a millionaire. I'm also not saying that this is for everybody. This is not for everybody. But what I can tell you is that the volume profile approach and the setups which I'm going to show you is the best I know. That's the best I found in my 12 years trading career. All right, that's the best I know, and that's what I'm going to show you now. All right, so let's get to it. And let me first introduce a very useful tool. It is a flexible volume profile. This is a volume profile indicator which I developed, and the difference between standard volume profile and my flexible volume profile is that with a flexible profile, you can move it around the chart. You can look into specific areas which you are interested in and which you are thinking about trading. Now, this may not seem like a huge deal, especially if this is the first time you hear about my trading setups and about volume profile, but you will see that this actually is a pretty big deal. You will see that when we go through the trading setups. Now let me just real quickly jump on the chart and show you how the volume profile looks like, how the flexible volume profile looks like. So what you see before you, that's a standard clean chart, NinjaTrader 8 platform. The symbol is Australian dollar, US dollar. It is a 30-minute chart. And let's say that I'm interested in how volumes are distributed in this zone, right? So I use the hotkey and use the volume profile like that. That's the flexible volume profile. You can move it around the chart. You can select specific areas which you are interested in, and it will instantly show how the volumes are distributed in those areas. Right? That's how the flexible volume profile looks like. So let me now go back and show you the trading setups. So the first trading setup which I'll show you is called the volume accumulation setup. This setup is based on the fact that big trading institutions need to place their orders in a rotation. The reason is that they control massive volumes, massive capital which they need to allocate in the market, and they can't do it when there's a trend because they want to do it slowly and unnoticed. They want to hide their action and their intentions, right? So they do it when there is a rotation. When there is a rotation, they can slowly and unnoticed place their orders, and when they are done with that, they manipulate the price into a trend. All right, so with this setup, the first thing which you want to do is look for a rotation which is followed by a trend. The reason is, in a rotation, heavy volumes, heavy institutional volumes got accumulated, big guys entered their positions, and then they pushed the price. In this case, they pushed the price downwards. Now, if you look at this picture, then this gives us a very useful information which we can use in our trading. We know that in this rotation, big trading institutions, the big guys, were entering their positions, right? We see that on the volume profile. You can see that there were massive volumes there. You see that the volume profile is very wide there, right? Then there was a sharp sell-off, downtrend. So this tells us that those guys were entering shorts. slowly and unnoticed, and then they manipulated the price downwards. That's the information we have. Now, how to work with that? You identify where the heaviest volumes got accumulated in the rotation area. In this case, I hope you can see it, it was in here. This is where the volume profile was the thickest. Right? So you draw a line there and wait for the price to return to this level again. In other words, you wait for a pullback. It doesn't really matter how long you wait. Markets have great memory. What you do is you simply draw the line there, set an alarm or set a limit order and wait for the pullback. When there is a pullback, you want to enter your trade at first touch, and you want to enter the trade in the direction of the trend. So there was a downtrend right in here. So that's why you want to place short from there. And that's the whole thing. That's the whole setup. Just make sure that you use the flexible volume profile in the whole rotation area. This whole rotation area, right? Because you want to see how the volumes were distributed throughout the whole rotation area. Now, this is the setup, but let me now show you the reasoning behind the setup. Let me tell you why it works. So this is another example of the volume accumulation setup. There was a rotation in here with massive volumes created and traded in here at this price level. Now, from that, there was a strong buying activity, an uptrend. This is the first step of the volume accumulation setup, right? Find a rotation followed by a trend. So, what happened in here? First, strong buyers were accumulating their positions in a rotation, right there. Those are the strong buyers. Then strong buyers are pushing the price aggressively upwards. That's the uptrend. Then sellers took over and the price went downwards towards this level. What happens when the price makes the pullback to that level, to this zone where the strong buyers were? Those buyers want to defend this zone. If the price goes past it, then those guys will start losing money. This zone is important for them. They accumulated their positions there and then they pushed the price upwards from there, right? So they don't want to see the price go below that place where they placed their positions, right? So what they do is that those buyers, strong buyers, aggressively defend their long positions and they push the price higher. This is strong buyers defending their long positions. So this is a first factor that drives the price upwards from the heavy volume zone. But there's also a second factor. We can't really tell which factor is stronger, but there are always two factors which help to move the price away from the heavy volume area. So this is the same picture. Again, buyers, uptrend, pullback, and this is the second factor. Sellers are getting rid of their selling positions using buy orders. Now, what that means, those sellers are pushing the price downwards, right? But when the price hits this important area, this heavy volume area, the sellers from this zone, they don't really want to risk a fight with the strong buyers from this place. So what they do, what the sellers do, is they quit their positions. They don't want to risk the fight, so they quit their short positions. They quit them here. They don't want to risk the fight. So when somebody is short and they want to quit their trade, they need to buy, right? And when they buy, they help to drive the price upwards. That's the buy order which helps to drive the price upwards, right? So that's the second factor. First factor is buyers defending their longs. Second factor is sellers getting rid of their shorts. Both factors are pushing the price upwards from heavy volume areas, right? Now this doesn't only apply on the volume accumulation setup, it also applies to other volume-based setups, because that's sort of universal logic, right? Every heavy volume area is very strong support or resistance zone, and it applies everywhere. Now let me give you some more examples on the volume accumulation setup so you get more acquainted with it. In here, what you can see is a rotation followed by a strong trend. So what you do is you use the flexible volume profile to look into the rotation and see if there were heavy volumes there and how they were distributed there. The heaviest volumes in this zone were in here. So you draw the line there, set an alert or a limit order, you wait for a pullback and you go short at first touch. There's no need for any sort of confirmation, you just enter the trade. If there is no macro news when the price hits this level, then you can just enter it and go short right away, right? So, next example. This was the Australian dollar Japanese yen. Heavy volume area in this rotation, massive volumes right there. And from there, crazy strong buying activity. So that's the volume accumulation setup, right? Strong buyers who are building up their positions in here, and then they pushed the price upwards. So this is the important support, marked by those heavy volumes. What you do, you wait for a pullback. When the price hits the level, you go long, right? Another one. This is a short trade scenario. Again, there was a rotation, which was followed by a really strong sell-off. So again, this is a sign that strong and aggressive sellers were building up their shorts in here, and then they pushed the price downwards. So what you do is you wait for a pullback, and when the price hits that level, you go short. Now maybe you're looking at those lines which I have in here, those gray and yellow lines. Now those are not Bollinger Bands or standard indicators. That's in fact VWAP indicator, which is another volume-based indicator which I like to use as a little addition to volume profile. Volume profile is my main trading tool, and the VWAP is sort of additional tool which I like to use to complement the volume profile with. So yeah, I just wanted to mention that if you are wondering, those are not Bollinger Bands. This is another volume-based indicator which I like to use with the volume profile. But anyways, this webinar is about my main trading tool, my most favorite trading tool, which is the volume profile. So let's focus on that. Now this is the last example of the volume accumulation setup, which I have in here. This one was on the Euro British Pound. There was a rotation, pretty tight rotation in here. And in that rotation, you can see that there were massive volumes traded, right? From there was strong buying activity, this one. So buyers were building up their longs, then they push the price upwards. What you do, you wait for pullback, and then at first touch, you go long, right? That's how the setup goes. So I hope that by now you have a feeling for the setup, you know how it works. I hope that you will be able to use it yourself and find some of your own trading levels with it. And let me now present to you the second trading setup. It is called the trend setup. It's a very original name because you use this setup when there's a trend, and the concrete steps to this setup is: first, you look for a strong trend. like in the picture, there is a strong trend. What you do next is that you use the flexible volume profile to identify the heaviest volume clusters within the trend. So you use the flexible volume profile over the whole trend area, and you look for volume clusters. In other words, sort of bumps on the volume profile, like this one, right? This volume cluster, this bump on the volume profile. What this bump means is activity of big guys, accumulation of volumes of big guys. So in this situation, aggressive buyers were pushing the price upwards. Then big trading institutions were adding to their longs there, and then the uptrend continued. This gives us information that strong institutional buyers were interested in placing their long orders there. This is a very important zone for them, and they placed a lot of their positions there. So the next step you do is you draw a line from the heaviest volume peak and wait for a pullback. That's basically the same as with the volume accumulation setup, right? So you identify the place where the volumes were the heaviest, you draw a line, and you wait for pullback. When your line gets hit, you enter a trade. You enter a trade which is in the direction of the trend. So in this case, this is an uptrend, so you'll enter long. The logic is that those guys, those strong buyers, defend their positions, defend this zone, which is clearly very important for them, and they push the price upwards. Alright, so that's about the trend setup. Let me now show you a couple of examples. So in here, there was a strong downtrend. Aggressive sellers were pushing the price downwards. And within this downtrend, there was significant volume cluster, significant volume bump. You can tell that it really stands out of the profile, right? You'll get the feeling for it, but this one really stands out. And the heaviest volume peak is in here. So you draw the line there and you wait for the pullback. Once the price hits it, you go short. That was a downtrend, so you go short, right? In the direction of the trend. Now another example on Swiss franc Japanese yen. In here there was a strong uptrend. Now in this picture I don't have the flexible volume profile, I have fixed volume profile, this one, which shows how volumes were distributed throughout the whole week, this week. In this case it doesn't really matter because the price was trending the whole week. So if I was using the flexible profile, I would still use it for this whole area, right? So anyways, this is a significant volume cluster which got created within the trend. So you draw the line there, you wait for pullback and go long from there. Now, there was also another significant volume cluster. If you look at the profile, then it was this one. Those volumes were created in here, and it already got tested right there. This was the reaction. So this one is spent. You only want to trade each level once, right? This one is spent. And also there is one more in here. And this is also a viable level to trade. This one is not spent yet. So what you want to do in case like that, you skip this one because this one is already tested. Then you go long from this one, from here. And then when the price drops even more, you enter another trade and go long from there, right? Now another example, this is the Australian dollar Japanese yen. Again, there was a downtrend, and within this downtrend, there was this significant volume cluster created in it. So what you do is you wait for the pullback. When the price hits it, you go short from there. This is the reaction you're waiting for, right? By the way, there is also the volume accumulation setup. those massive volumes from this rotation, which took place before this strong sell-off. So another viable level to trade from would be here. Alright, so that's the trend setup as well as the volume accumulation setup. Now let me show you another example where you can see both those setups. There was a trend right there, and within that trend there was this very nice and clearly visible volume cluster, right? Those volumes get created in here. So what we want to do is go long from there. By the way, those lines which you can see there, those green lines, those two, this is a pretty handy tool which I have, and that tool basically draws my intraday and swing trading levels into your trading platform. So my members of my trading course use that. So whenever I publish new trading levels, those levels automatically show on their trading platform like that. A line shows there and also the value of the level, right? Anyways, back to the setup. This was the trend setup. This was the reaction, but there was also the volume accumulation setup. Those massive volumes accumulated in this rotation from which this strong uptrend started. So what you do, you first go long from there, then you wait for another pullback to this level and you go long from there. All right, this is trend setup. This is volume accumulation setup. Anyways, however you call it, you basically always trade from the heavy volume areas, right? That's the main idea behind those two setups. Heavy volume area, wait for pullback, and enter your trade. Now, what I wanted to show you as well is a combo of two trading setups. One is the trend setup, the other one is sort of price action setup. How this works is that first you look for the trend setup. Like in here, there was an uptrend, and this is a significant volume cluster created within the uptrend, right? So this is the support. This is the level you want to trade longs from. Now the second setup, the price action setup, shows that the price reacted to this zone in the past really sharply. In here, this rejection. Now this tells us that in the past, this was a resistance. But when the price went past the resistance in here, the resistance got breached and it became a support. When a resistance gets breached, it becomes a support. This is the old price action setup. It is not my invention, but I like to use it exactly like in here as a combo of volume-based setup, trend setup, and this price action setup. Let me show you a couple of more examples of it. So in here, there was a downtrend, and within that downtrend, there was this significant volume area, this significant volume cluster, right? So that means you have a short there, short based on the trend setup, the volume-based setup. If you look at this area, you can see that the price reacted to this zone very strongly in the past, those two reactions. That tells you that this was a support. But in here, the support got breached and it became a resistance, right? And that's exactly at the same place where we have this volume cluster. So that's pretty cool about it. Combo of two setups. Trend setup, which is a volume-based setup, and this support, which becomes a resistance setup, which is a price action setup. I must say that I really like to look for those, as those get very good win ratio. Now another one, again, there was an uptrend, and within that uptrend, there was this significant volume cluster, significant volumes created in here, so strong buyers were adding to their longs in here as they were pushing the price upwards, right? So you wait for pullback, you go long from there. That's the trend setup based solely on volumes. But also the price reacted to this zone in the past, which tells us that this was a strong resistance. Then the price went past the resistance and the resistance became a support, right? Exactly at the level which we previously identified with volume profile. So again, this is a combo of a volume-based setup and price action setup. Both point to the same trading area, and that makes the trading level even stronger. Now, a lot of people think they need to use the volume profile only for intraday trading, but the truth is that volume profile is a very universal tool. You can use it also for planning long-term investments. So that's what you see on the screen. This is a prediction which I made on the euro dollar, and this is a monthly chart, which means that each candle is 1 month. Now, the cool thing, which I really like about the volume profile, is that the setups are the same no matter which time frame or trading instrument you use. So in this case, we have monthly chart, and as you can see, there was a strong downtrend on the euro. Now, within this downtrend, there was this massive volume cluster created within the downtrend. So this tells us that the strong sellers, institutional sellers, were adding to their short positions in here before pushing the price even lower. This is important information. So what I did, I draw this line and waited for the price to make it back to this level. As you can see, I waited over 2 years. And what I wanted to show you as well is that this area also worked as a strong support. Not exactly that level, but the general area. That's all what I need. Those 3 super strong rejections told me that this was a very strong support zone. But the support zone got breached when the price went past it, and it became a resistance, right? So again, that's the combo of the 2 setups: volume-based setup, that's the trend setup with a volume cluster, and the price action setup, which says that support that got breached becomes a resistance, right? So that was the whole logic behind my short trade from this area. By the way, there was an article which I published on my website where I made this prediction. This is a screenshot from that prediction, and I made 1600 pips just on this trade. Let me go to the website and show you. So this is the website. Let me go to articles. Let me find it. It's a bit older one. This one. This was the initial prediction. That's the screenshot which I showed you. And this is how it went. This is where the volume cluster was. This is a screenshot from my platform. Those were the rejections. This was the level. This was the trade entry. And this is where I quit the trade with 1600 pips in profit. Right there. So, as you can see, volume profile is pretty universal. You don't need to use it for day trading. You can plan your long-term investments like that. You can use it however you want. That's what I really like about it. Now let's go to the next part of the webinar, which is take profit placement. There is only one rule to follow, and the rule is pretty simple. Place your take profit into a heavy volume area. Now you know that heavy volume areas work as a strong support or resistance zones, right? So that's the reason why you want to place your take profit there. Let me show you on this example, right? There was an uptrend in here, and there was a volume cluster. So this is the trend setup, right? You wait for the pullback. when the price hits this heavy volume cluster, you go long. But where do we quit the trade? We quit the trade in the next heavy volume area. So what you do is you use the flexible volume profile to look into the recent area and identify the closest heavy volume area. In this case, that was the heavy volume area. And this could represent a potential problem because it could work as a resistance. So what you want to do is you want to quit your trade before it reaches the resistance. So the volume-based take profit would be a little bit before the price reaches this heavy volume zone. Right there. In this case, you can see that this heavy volume zone really worked as a resistance and the price actually turned. This was the ideal place to quit the trade. Now let me show you another example. There were heavy volumes created in this rotation, right there. And from that rotation, there was this strong sell-off. So now you know that this is the volume accumulation setup, right? You know that you wait for a pullback and you want to go short from there, from the place where the volumes were the heaviest, right? So you go short from there and you need to find a place where to quit the trade. Sure, you can use fixed take profit, but the beauty of volume profile is that it allows you to stretch your take profits a bit more, and also on the other hand, you'll be aware of the important zones where you don't want to trade in. So in this case, if you hold the short, you definitely don't want to go against those volumes. This is where you want to take your profit, because this zone could work as a support. In this case, it only sort of did work as a support, but the momentum of the short trade was definitely over when the price hit this heavy volume zone. So this is where you want to quit your short. This is the ideal volume-based take profit. All right. Now, another example of volume-based take profit is in this picture. This is the British pound, and there was volume accumulation set up in here. Heavy volumes created before strong sell-off. Then there was a pullback and short from there. Let me use a different color. Short from there. Now, there are two places where to quit the trade. The nearest volume-based level where you should quit the trade, or at least half of it, is in here. So this should be the first take profit, at least for the first half of the trade. Now, if you decide that you want more, you see that the momentum is strong, that the price is dropping sharply, maybe you want to hold on to that trade, at least half of the trade, and quit it later. In that case, the next ideal place to take your profit is definitely here. Massive volumes created within strong uptrend, and this is basically the trend setup, right? Telling you to go long. So at least you should quit your short in here. If you don't want to go immediately long from there, which as you can see wouldn't be a bad idea at all, but this is a place where you definitely want to quit your short, as it would be extremely risky to hope that the market will just shoot past such a strong heavy volume zone. That would be super risky. By the way, people who don't use volume profile wouldn't see that. They wouldn't know about the risk they are taking if they were trading that and being short. They wouldn't see it. That's the beauty of volume profile. Now let's talk about stop loss placement. Again, there's only one very simple rule, which says place your stop loss into low volume area. That's the exact opposite of take profit, right? So in this case, there was a downtrend, and within this downtrend you can see that there's a very nice volume cluster, right? It's a beautiful trade entry from this level, strong short level. You wait for pullback, you go short from there, right? So where do you place your stop? You place it in low volume area, behind this heavy volume area. In here, this is the ideal place for the stop loss. Low volume area, which is behind the heavy volume area which you are trading, right? Another example. Heavy volumes were traded in here, then there was a strong sell-off. So this is the volume accumulation setup. What you do is you wait for a pullback, you go short from there. But let's now talk about the stop loss placement. In this case, what I see are two ideal places where to place the stop loss. The first one is behind the heavy volume area into low volume area in here. Now in this case, this is just 7 pips, not too much. If you like to let your trades breathe, then you may want to use bigger stop loss, which in this case would be in here. At the top of this rejection, at this swing point where there are no volumes at all in here. So two possible areas where to place the stop. One is 7 pips. If that's not enough, then the next one in here, that would be 18 pips. Now, the last example of the stop loss placement, this was a swing trade on the euro dollar. It was based on the trend setup. Very nicely visible trend setup. There was this uptrend, and within that uptrend, crazy strong volume cluster. So, as you now know, what I do in such a case is I wait for a pullback and go long from there. But what about the stop loss? In this case, it's pretty easy. Low volume area behind the heavy volume area, which represents the support in here. This is the ideal stop loss for that swing trade. Now you may ask, what's the logic behind placing stop loss in a low volume area? The logic is that the price should react to the heavy volume area. This should represent a strong support. If the price goes past the support and enters the low volume area zone, then the support failed. We no longer have the edge. Our idea failed and the support is breached. There's no reason why we should hope that the price will turn now. The edge we had is gone, alright? So that's why you place the stop loss in low volume area behind heavy volume area. Now let's talk a bit about best time frame. I already mentioned that, but let me repeat it so it's absolutely clear. Volume profile works on all time frames. There's no best time frame. You can use it for intraday trades, quick in and out intraday trades. You can use it for swing trades, and you can as well use it for planning long-term investments. For example, like I showed you on the euro dollar, that was the monthly chart, right? So there's no best time frame. Volume profile is not time dependent. Now this may sound a bit theoretical, so let me go and show you the chart and show you what I mean by that. So this is the Australian dollar again. Let me print the volume profile over this period, over this day, right? June 20th. This is a 30-minute chart. And this is the shape of the volume profile. Heavy volumes in here, heavy volumes in here, then heavy volume area in here. All right? That's 30-minute chart. Now, if I switch to 15-minute chart, let me zoom it out a bit. The profile is absolutely the same, right? Only thing which changed is candles, but the volumes are the same. So this is what I meant when I said that volume profile is not time dependent. And it doesn't really matter if you use 15-minute chart or 30-minute chart because the volumes are still the same, right? But obviously if you are trading intraday trades, you want to use like 15-minute charts or 5-minute charts or maybe 30-minute charts. And if you trade swing trades, then obviously you want to use higher time frames like 4-hour charts or daily charts. But the only thing which actually changes in the chart is the candles. Now let me switch back and let me show you my trading workspaces. So this is a workspace, a volume profile workspace, which I use for my intraday trading. What I have on my screen are 3 charts. Those charts are linked, so they always show the same trading instrument. In this case, they show the US dollar Japanese yen. The chart at the top is a 60-minute chart, and it shows the bigger picture, the overview of the market. And in here, I use fixed volume profiles. Those profiles get automatically printed on the chart every week. For example, this profile right there shows how the volumes were distributed throughout this whole week, right? So this is sort of overview chart, which I use. The big picture, so I don't get lost with the details. Now, the chart below that, this is a 30-minute chart, and in here, I look for the trading setups, which I am showing you in this video. And I use a flexible volume profile to look for those, right? And the last chart, that's a 15-minute chart, more detailed chart. And I use 4-hour profiles. Those are fixed volume profiles. Those get printed automatically every 4 hours. Right? So that's how my day trading workspace looks like. And this is how my swing trading workspace looks like. What I have in here are 2 kinds of volume profiles. There's a fixed profile, this one, the gray one, and it shows how volumes were distributed throughout the whole year. And then there's the flexible profile. That's the green one, the profile which you can move around, look into specific areas in the chart, and look for the trading setups, right? Again, the fixed profile, the gray one, shows me the bigger picture, how the volumes were distributed throughout the whole year, and the flexible profile is there to find the trading setups. Now, regarding the best trading instruments for volume profile, you can use it for whenever you need, basically. I personally like to trade currencies, but you can also use the profile to trade indices. A lot of members of my trading course actually use the profile to trade indices like SP 500, DAX, Dow Jones, Nasdaq, and so on. You can also use it to trade raw materials like oil, gold, and so on. Equities like Apple, Tesla, you name it, all the stocks you can name. And you can also use the volume profile to analyze cryptocurrencies. Now, regarding platform and data, for my volume profile trading analysis, I like to use NinjaTrader 8 platform, which is a free platform and it is unlimited. You just download it, you use it, you don't pay anything. The functionality is all there, so no limits. It's a perfect platform, constantly updated with a lot of functions and features which you can use. This is the address, ninjatrader.com. Let me switch over to their website. So this is it. This is how it looks like. What you need to do, it's pretty simple. Enter your email address in here and download the software. That's it. Super simple. Now, regarding the data, what I prefer and what I recommend is FXCM data feed. It is a free data feed. Also, it is unlimited, so there is no trial version which would stop working after 14 days or a month. This is unlimited, which is pretty cool about it. This is the address to get it, tradingstation.fxcm.com/free demo. This is how the website looks like. You just fill in this information and they'll send you the credentials. Then you connect it with NinjaTrader and that's it. You will have perfect charting platform for free and you'll have really good data which you can depend on. Now this process is very simple, but if you are not too friendly with computers and setting stuff up, There is a video which I made, it's on YouTube. It's called How to Get Unlimited Forex Data for NinjaTrader 8. You just go and search for it, and you can connect your NinjaTrader to the FXCM data using that guide. Sounds good? Now, what I want to cover next is frequent questions which I get regarding trading with volume profile. Alright, so the first question which I want to address is, do I need to switch broker? The answer is no. You don't need to switch your broker when you trade with volume profile. What I recommend is you do your volume profile analysis on the free platform, which is the NinjaTrader. So you do the analysis there, and then you execute your trades with your current broker. That's the easiest way how to go about it. NinjaTrader has a couple of brokers which they recommend and which they can link their platform to, but those brokers are really not the best brokers around. And also you would need to purchase the full version of NinjaTrader 8, which is around $1,000. So you don't need to do that. The best way is, I think, just use their free version of NinjaTrader 8 for charting and then stick with your current broker. That's also what I recommend to members of my trading course. Now the next question, another very popular question, does this work with Bitcoin and cryptos? The answer is yes. Let me show you. So now I'm in NinjaTrader, and what I'm going to do is connect to their Coinbase connection. That's a default connection which they use for cryptos. It's a free connection, you don't need to set it up or pay for it. You just connect to it, like I just did. And let me now just create a new chart. Let's go for Bitcoin. 30-minute chart. Let's say we want 10 days. This is it. Let me load my volume profile indicator there. And that's it. That's the flexible volume profile on the Bitcoin chart. Right? So no problem with cryptos and Bitcoin. And let me now skip to the next question, which I get pretty often. And the question is, does this work with stocks? Does volume profile work with stocks? Again, the answer is yes. And again, I'll show you. So again, this is the Bitcoin chart. What I'm going to do is change the data feed. I'm going to disconnect the Coinbase and I'm going to connect to Kinetic end of day data. That's a free data which comes with NinjaTrader platform. And let me create a new chart. Let's go, for example, for Apple. What we want there is a daily chart. When it comes to trading stocks, I prefer long-term investments, and I do that using the volume profile. So let me load up the data. Let me go full screen, and let's load up the indicator. I'll switch to TPO calculation and go OK. And here we go. Volume profile on Apple. By the way, do you see that nice reaction to those volumes? Or to those volumes? Pretty cool, right? So that's volume profile on stocks. And let's now go to the next question. And the next question is, Forex is decentralized. Do I need futures data? The answer to that is no. No, you don't need futures data. Now the problem those people refer to is that Forex doesn't have a centralized exchange. So theoretically, two brokers can give you different quotes, different price movements, and different information about volumes. The only way how you can be sure that everybody on the planet sees the same information about volumes and price is you look at centralized exchange, which is futures or stocks. But Forex doesn't work like that. So that's why those people ask if we can depend on the information about volumes our broker gives us or our data feed gives us. Now this is a really good question, and in theory the data coming from futures, which is centralized market, and Forex, which is decentralized, could be a bit different. But let's have a look at two charts, let's compare, and you will see yourself if you are able to spot a difference or no, right? So enough theory, and let's go back to chart. So now you see two charts. The chart on the left is decentralized Forex chart showing the Australian dollar US dollar. That's Forex. The chart on the right shows futures on the Australian dollar. That's futures. This one is decentralized. This one is centralized. Now, if you look at the prices, do you see any difference? The charts move exactly the same. There's no difference. I'm not able to spot a difference. Right? Now, but what about the volumes? Let's check the volumes, because we are interested in volumes, right? So, let's compare. Let's do it, for example, like this. Let's select the same period and let's compare. The volume profiles in both cases look absolutely the same. Maybe I could move the charts a bit so it's not too confusing, so it aligns better. Right? This volume cluster, that's this one. This volume cluster, that's this one. The heaviest one is in here. I'm not really able to spot any major difference there. So yeah, that's why I don't really mind doing my analysis on Forex, which is decentralized, because the information is very much the same as from the centralized exchange. Alright, so that's the little comparison which I wanted to show you. And let's now go to the next question, which I believe is the last one. Yeah, that's the last one, and a very popular one. Can I use volume profile with MetaTrader? The answer is yes, but MetaTrader is not as fancy as NinjaTrader. The reason is NinjaTrader is a new platform. It is getting constant updates, whereas MetaTrader is 15 years old platform. It has its limitations, but still you can run the volume profile there. It's not as nice and it doesn't have as many cool features as the volume profiles for NinjaTrader 8, but it will still give you a pretty solid edge in your trading. And if you start using that, at least with MetaTrader, it will still be a huge leap forward for your trading. So let me show you how it looks like. So this is the MetaTrader. There is a hotkey which I use to call the profile, and then I can move it around like this to see how the volumes are distributed in the areas which I'm interested in. Now we are getting close to the end of the webinar, guys. If you want to learn more, which I think you do since you stayed until the end of the webinar, then I have a very special offer for you. If you want to continue learning how to trade with volume profile, then I think that the next best step for you would be getting the special training pack, which I developed for traders just like you. It's called the Elite Pack, and this is what it consists of. First, there is a video course. It is 15 hours long, it has 44 videos, and in that video course you will learn all there is about the volume profile. The course is very practical. There are hundreds of real trade examples to learn from. Sure, there is some necessary theory, but the main focus is on trading strategies and on real trading. Now, after we've gone through the video course, it's time for some trading. So the next thing which you are going to get is Dale's trading levels. Those are levels which I publish every day. Those are day trading levels as well as swing trading levels. And those levels are the strongest support and resistances which I'm going to trade and which are based on strategies and setups which you learned in the video course. What you will also get with the trading levels pack is a video which you'll get every day, And in that video, I'm talking about the current levels which I have, about the logic, why I placed those levels, where I placed them, how I'm going to trade them. I'm also talking about previous trades which we had and about other trading related stuff. So the Dale's trading levels will help you to see how to apply all you have learned in the video course in real trading conditions, and you will also start gaining confidence and master all the details about the strategy in live markets. And finally, you will start moving towards the main goal of the course, which is you being able to trade yourself without my help. That's what I want to teach you. Now the Elite Pack also includes all the tools which you need for your trading. That's my volume profile indicators, which I developed for NinjaTrader 8 and MetaTrader 4. Those are the indicators which you saw in this webinar. And as a bonus, you will also get that VWAP indicator, which I just briefly mentioned during the webinar. By the way, that VWAP indicator also comes with a little video course, which will teach you how to go about trading with it. So that's what the Elite Pack includes. And additionally to all that, you are also getting free tech support. What that means is that this very nice guy will set up a meeting with you and he will install NinjaTrader for you. He will set you up with data feed. He will load my personal workspaces, which I use for my trading. And he will install and authorize all the trading indicators for you. Now this should give you sort of a jump start, so you don't need to read manuals and set everything up yourself. Instead, you'll be able to focus on your own learning and your own trading. By the way, I'm pretty proud on the quality of support that we provide, because it's not like you send the money and it ends there for us. But we make sure that you have everything you need, that you understand everything, and that you are 100% satisfied with the service you get. So it works like that. If you need any help, you shoot us an email or ask us on the quick chat, which we have on the website, and you get taken care of. That's how our lifetime member support works. Now let's get to the deal. If you got those products separately, then it would be $836. Now, since you came to the webinar and stayed until the end, you proved that you are really interested in learning how to trade with a volume profile, and for that reason, I'll help you out. What I'm going to do is I'll reduce the price from $836 to $397. If you do the math, then it's 52% off. Would you like that? Having all those 4 products, as well as the free tech support, which installs everything for you for $397. If you do, if you like it, and if you would like to become our Elite Pack member, you have 4 days to get it. All right? This offer will stand for the next 4 days. After that, the price will increase back to the original price. All right, so anyways, that's for the special Elite Pack. If you would like to read some reviews on my service, then you can visit the website, which is called Forex Peace Army. And on this site, there are unbiased reviews and ratings from some of the members. So you may check that out, see what they have to say. My course has a 5-star rating, which is the best rating you can get on this site. All right, so if you want to check it out, go to forexpeacearmy.com and search for Trader Dale. All right, guys, so that's about it. That's about the webinar. I hope you liked it. I hope you found it useful and that you learned a lot of new stuff there. If you have any questions, then this is my email address and I'll be happy to answer them and I'll be happy to help. If you prefer a quick chat, then go to my site. There is a quick chat window and we can have a quick chat. All right. So again, that's about it. Thanks for watching and I'll be looking forward to seeing you in the members area. Until then, happy trading.